Hello, everyone, from the page of a podcast series, Murat Kalaman.
Oh, wow.
Today,
Morbiste.
we're taking a deep dive into the future of finance.
Okay.
And let me tell you,
Yeah.
the future is looking pretty artificial. We've got research reports,
Right.
expert interviews,
Oh, yeah.
even a glimpse into the world of blockchain,
Wow.
all pointing to the massive impact AI is about to have on how we bank, invest,
Right.
and even think about money itself.
It's not just about apps or faster transactions. We're talking about AI as a general purpose technology. Think about how the steam engine revolutionized manufacturing or how the internet, everything.
Yeah.
AI has that same world-changing potential, and finance is right in its crosshairs.
Okay, I get that AI is a big deal. I mean, my phone practically finishes my sentences these days. But finance,
Yeah,
that feels like a whole other level of complexity.
it is.
Where do we even begin to unpack this?
Well, let's start with the bottom line, profit.
All right.
One report we're looking at predicts AI could add a whopping $170 billion to global banking profits by 2028.
Wow.
Imagine a world where banks can personalize your financial products in real time, predict market shifts with incredible accuracy, and even automate complex trading strategies.
Wow.
That's the kind of power AI brings to the table.
Yeah.
And it's no surprise experts are predicting massive growth.
$170 billion.
Yeah.
That's mind-blowing.
It is.
But 2028 feels right around the corner.
Yeah.
Is all of this really happening that fast?
Well, there's definitely a lot of hype around AI right now, but in finance, we're moving past the, wow, that's cool phase and into the, okay, how do we actually use this phase?
Gotcha.
Financial institutions are figuring out practical applications and things are moving quickly.
Okay.
But it's not all smooth sailing. The report also highlights some speed bumps along the way.
Okay, like what?
Implementation timelines. Finding the right talent to build and manage these systems, and clients who are expecting more and more from their financial institutions.
So it's not just a matter of flipping a switch and letting the AI take over?
That's right.
There are still real-world challenges to figure out.
Absolutely.
Okay.
But even with those challenges, the potential is undeniable.
Right.
And here's where things get really interesting.
Okay.
What happens to jobs in finance? I think that's a question on a lot of people's minds.
Definitely. Every time I hear about AI, I can't help but think, is a robot about to take my job? And in finance, with all this talk about automation,
Right.
feels like a valid concern.
It's natural to worry about that.
Right.
But history shows us that new technology often changes the types of jobs rather than eliminating them altogether.
Okay.
Think about spreadsheets.
Huh?
They didn't eliminate accountants.
Right.
They made them more efficient and valuable.
Sure.
AI is likely to have a similar effect, creating new opportunities and changing the skills that are most in demand.
Okay, that's reassuring.
Yeah.
But what kinds of new jobs are we talking about? Give us some specifics.
Sure.
What skills should people be developing if they want to thrive in this AI-powered future of finance?
Think about areas like AI governance and compliance.
Okay.
As AI becomes more integrated into financial systems,
Right.
we need people who understand the ethical implications, the risks,
Right.
and how to ensure these powerful systems are used responsibly.
Yeah.
These roles are only going to grow in importance.
So if you're interested in finance, learning about AI governance and compliance is a smart move.
Definitely.
It's like future-proofing your career.
Yeah.
But hold on. This deep dive is about to take a turn into the truly bizarre.
Okay.
The report talks about non-human customers,
What?
AI agents making financial decisions.
Really?
That sounds like something straight out of science fiction.
It does.
It does.
Yeah.
It does sound futuristic, but it's closer than you might think.
Oh, wow.
Imagine AI agents acting on behalf of clients, negotiating mortgages, managing investments.
Wow.
They're like the ultimate financial assistants, operating 24/7, analyzing data, and making decisions based on your individual goals.
Interesting.
There's a quote in the report that really stuck with me.
Okay.
Bankers often think that they are in control. They may not be.
Wow.
That's a bit chilling, isn't it?
It is.
Like we're on the verge of a world where banks are scrambling to keep up with these hyper-efficient AI agents.
It's definitely a disruption,
Right.
and banks will have to adapt. The traditional idea of customer loyalty, that stickiness that keeps people coming back, might not hold up when AI agents are out there constantly searching for the best deals and opportunities.
Okay, I have to ask, imagine a world where your AI is negotiating your mortgage, or managing your investments. Is that exciting?
I don't know.
Or terrifying?
Sure.
Honestly, I'm feeling a bit of both.
Yeah, I think I am too.
Yeah.
It's tough. It is. It's a tough one. Yeah. But let's bring this down to earth for a minute and talk about what's already happening.
Right.
The report highlights a whole range of specific AI applications that are being used in finance right now.
Yeah, we're not just talking about some far-off future here.
Right.
AI is already changing the game in finance.
Right.
And it's doing it in some pretty amazing ways.
It is.
From coding to compliance to customer service. It's like AI is infiltrating every aspect of the industry.
It really is.
Let's walk our listeners through some of the most intriguing applications.
Let's do it.
Okay.
Let's start with something that might surprise people.
Okay.
Coding and software development.
Right.
AI assistants like GitHub Copilot are already helping developers write better code faster. Imagine cutting the time you spend debugging in half.
Wow.
That's the kind of efficiency boost these tools are offering.
Yeah.
And it translates to huge cost savings for companies.
AI writing code?
Yeah.
That seems like a huge leap forward.
It is.
It makes you wonder what those developers are doing with all their newfound free time.
That's a good question.
Right.
I don't know.
I don't know either.
We'll have to ask them.
We'll have to.
Uh-huh.
But it's not just about speed.
Right.
AI is also helping to catch errors and improve the overall quality of code.
Exactly.
That makes sense. So it's like having a superpowered programming buddy by your side,
Yeah.
making sure you don't make any silly mistakes.
That's a good way to put it.
But what about something a little more down to earth, like fraud prevention?
Yeah.
It seems like AI would be a natural fit for catching those shady transactions.
You're right. AI is a perfect weapon in the fight against financial crime.
Okay.
The report highlights MasterCard's Gen AI tool, which is designed to spot fraudulent transactions before they even happen.
Oh, wow.
They're claiming it could reduce illegitimate transactions by a whopping 20%.
Whoa, 20%. That's incredible.
It is.
Think about the impact that could have on reducing financial crime and keeping people's money safe.
It's huge.
It is.
Absolutely.
So that's great.
It is.
It's good news.
It's good news.
But let's talk about another area where AI is making waves.
Yeah.
Customer service.
Uh-huh.
We've all had our fair share of frustrating experiences with chatbots.
Oh, yeah. Tell me about it.
Those clunky automated systems that never seem to understand what you're asking.
Oh, I know.
Ugh, don't even get me started on chatbots. I swear I've spent hours of my life arguing with those things, trying to get them to understand my simple request.
Right.
Are AI-powered chatbots really any better? Or are they just going to make us tear our hair out even more?
Well, the good news is that AI is making chatbots smarter and more helpful.
Yeah.
They're getting better at understanding natural language and providing personalized interactions, which can make a big difference in the customer experience.
So it's not just about getting rid of those annoying automated menus. AI can actually make chatbots feel more human.
Exactly. The goal is to create chatbots that can provide the same level of service as a human representative without the wait times and frustration.
That sounds promising.
Yeah.
But I also remember reading about a case where a chatbot actually gave someone bad medical advice with tragic consequences.
Oh, gosh.
It highlights the fact that AI, even when it's designed to be helpful, can still make mistakes.
That's true. It's a reminder that AI is a powerful tool.
Right.
And like any tool, it needs to be used responsibly.
Right.
But let's move on to another area where AI is having a huge impact. Investment research.
Right.
Analysts are drowning in data these days, trying to make sense of market trends, economic indicators, and company financials.
It's like trying to drink from a fire hose of information.
It really is.
How can AI possibly help with that?
Well, AI is a data crunching machine. It can process massive amounts of data in a fraction of the time it would take a human, right? Identify trends and even generate reports. The report we're looking at shows that AI could free up a significant amount of an analyst's time, allowing them to focus on the more strategic aspects of their job.
So instead of drowning in spreadsheets, analysts can actually have time to think.
Exactly.
That's a revolutionary concept.
It is.
But can AI do even more than just analyze data?
Yeah.
Can it actually help with making investment decisions?
Absolutely.
Really?
AI can be used for asset and portfolio management, optimizing portfolios based on your risk tolerance and financial goals.
Wow.
It can even identify new investment opportunities that you might not have even considered.
So AI could be the ultimate financial advisor?
In a way, yes.
Wow.
AI can provide personalized financial advice tailored to your specific situation. But it's not about replacing human financial advisors altogether.
Right.
It's more about augmenting their capabilities.
Oh, okay.
Giving them the tools to provide even better service to their clients.
I'm starting to see how AI could fundamentally reshape the financial landscape, making things more efficient, personalized, and accessible.
Yeah.
But before we get too carried away with all the amazing possibilities, I think it's time to address the elephant in the room.
Okay.
The risks and potential downsides of AI in finance.
Right.
And trust me, we've got a lot to cover.
Okay.
From the potential for bias to the rise of deepfakes.
All right, let's do it.
Let's do it.
Yeah, AI isn't a magic solution.
Right.
Like any powerful technology, it comes with its own set of challenges and risks.
Right.
And it's crucial that we understand those risks before we go all in on AI and finance.
Okay. Let's dive into those risks then.
Okay.
Where do we even begin?
Right.
There's so much talk about the potential for bias.
Right.
Lack of transparency. Even the rise of deepfakes.
Yeah.
It can feel a bit overwhelming, to be honest.
Yeah. It is a lot to unpack.
Yeah.
But let's start with bias.
Okay.
One of the biggest concerns is that AI algorithms, if not carefully designed, can perpetuate existing societal inequalities. Imagine an AI system being used to evaluate loan applications.
Okay.
If the data it's trained on reflects historical biases in lending practices, it could end up discriminating against certain groups of borrowers, even if that's not the intention.
So it's not just about the AI being intentionally programmed to be biased.
Right.
It can inherit biases from the data it learns from.
Exactly.
That's pretty scary when you think about the impact these systems could have on people's lives.
It is, and it highlights the importance of having diverse teams working on AI development.
Okay.
If everyone involved comes from the same background and has the same blind spots, those biases are likely to be reflected in the final product. We need people with different perspectives, experiences, and expertise to identify and mitigate potential biases.
So diversity isn't just a feel-good concept.
Right.
It's essential for building AI systems that are fair and equitable.
Exactly.
But even with the best intentions, it seems like it would be hard to completely eliminate bias from these systems.
It's definitely a challenge.
Yeah.
And it requires ongoing vigilance. We can't just set these systems loose and assume they'll always do the right thing.
Right.
We need to constantly monitor their performance, test them for bias, and adjust them as needed.
It's like being a parent. You can raise your kids with the best values, but you still need to keep an eye on them and guide them as they grow up.
That's a great analogy.
Yeah.
And it highlights the fact that AI is not a static thing.
Right.
It's constantly evolving, learning, and adapting.
Right.
Which brings us to another major risk.
Okay.
Lack of transparency. AI can sometimes feel like a black box. We don't always understand how it reaches its decisions, which can be unsettling, especially when it comes to something as important as finance.
I've definitely felt that way.
Yeah.
It's like trusting your money to a magic 8-ball. You shake it up, get an answer, but you have no idea how it came to that conclusion.
Exactly. And that lack of transparency can make it difficult to trust these systems.
Yeah.
If you're denied a loan, for example, you want to understand why. Was it a legitimate reason based on your financial history?
Right.
Or was it the result of some hidden bias in the algorithm?
Right. And if we can't understand how these systems work, how can we hold them accountable when things go wrong?
Right.
It seems like a recipe for disaster.
That's why explainability is such a crucial area of research in AI right now.
Okay.
Scientists and engineers are working on developing techniques to make AI more transparent.
Okay.
To give us a peek inside that black box and understand how it's making decisions.
So instead of just spitting out an answer, these explainable AI systems could actually show us their thought process.
Exactly. They might provide visualizations, for example, that show how different factors contributed to a particular decision.
Okay.
Or they might generate natural language explanations that we can understand.
That sounds promising.
It is.
But what about the AI systems that are already out there?
Yeah.
The ones that were built without this emphasis on transparency.
Yeah.
Are we just stuck with those black boxes?
Well, researchers are also working on techniques to reverse engineer those existing black box models. to try to understand how they work, even if they weren't designed for explainability.
So it's like peeking under the hood of a car.
Yeah.
Even if you weren't the one who built it.
Exactly. And while it's not always a perfect solution,
Right.
it can help us identify potential problems and build trust in these systems.
Well,
the goal is to move towards a future where we can use AI with confidence, knowing that it's making decisions in a fair, responsible, and understandable way.
Okay, let's shift gears and talk about something that really freaks me out. The potential for AI to be used for misinformation, manipulation, and those incredibly realistic deep fakes.
Yeah.
The internet is already flooded with fake news and scams.
It is.
Add in AI's ability to create content that's virtually indistinguishable from the real thing.
Right.
And it seems like we're headed for a world where we can't trust anything we see or hear.
It's a valid concern.
It is.
The ability to create deepfakes in particular has advanced to the point where it's incredibly difficult to distinguish them from authentic content.
Right.
And that has huge implications for finance, where trust and credibility are paramount.
Imagine a deepfake video of a CEO announcing a major financial decision, or a fake news article spreading rumors about a company's stability.
Right.
It could send shockwaves through the markets and cause real financial damage.
Absolutely. And the potential for scams is enormous.
Yeah.
Imagine receiving a phone call from someone who sounds exactly like your bank representative, but it's actually an AI-generated deepfake designed to trick you into giving up your personal information.
That's terrifying.
It is.
So are we doomed to live in a world where we can't tell what's real from what's fake? Is there any hope?
It's not a hopeless situation, but it does require a multifaceted approach.
Right.
First and foremost, we need to raise awareness about the potential for deepfakes and other forms of AI-generated misinformation. The more people are aware of the threat, the more likely they are to be skeptical of what they see online and take steps to verify information.
So it's about being a critical consumer of information.
Exactly.
Not just blindly trusting everything you see on social media or in your inbox.
Right. And we need to develop better tools for detecting deepfakes.
Okay.
Researchers are working on algorithms that can analyze videos and images for telltale signs of manipulation, but it's an ongoing arms race as deepfake technology continues to evolve.
Yeah. So it's a constant battle to stay ahead of the bad guys.
In a way, yes. But we're also seeing promising developments in deepfake detection technology.
Okay, that's good.
And finally, we need to consider legal and regulatory frameworks.
Okay.
Creating and distributing deepfakes with malicious intent should have consequences.
That makes sense.
Yeah.
We need to hold people accountable for using this technology to spread misinformation or harm others.
Right.
But with all these risks, you have to wonder, is it even worth it? Are the potential benefits of AI in finance worth all the potential downsides?
That's the million-dollar question, isn't it? And honestly, there's no easy answer.
Yeah.
It's about weighing the risks and benefits.
Right.
And making informed decisions about how we develop and deploy AI.
Yeah.
It's a balancing act.
Right.
And we need to be careful not to throw the baby out with the bathwater.
So it's not about rejecting AI altogether.
No.
It's about using it responsibly and ethically.
Exactly. And that's where regulation comes in. We need clear guidelines and frameworks to ensure that AI is used for good without undermining our privacy, security, or financial well-being.
Okay, let's dive into that regulatory landscape then.
All right.
What steps are being taken to ensure that AI is used responsibly in finance?
Well, the good news is that regulators around the world are starting to pay attention to the potential impact of AI.
Okay.
And we're seeing a range of approaches emerging from comprehensive legislation to more hands-off guidelines.
Can you give us some specific examples?
Sure.
Who's leading the charge when it comes to AI regulation?
The European Union is definitely at the forefront with its ambitious AI Act.
Okay.
It's a really comprehensive piece of legislation
Right.
that aims to classify AI systems based on their level of risk and establish clear rules for how they can be developed and used.
So they're taking a very proactive approach.
Yeah.
Trying to anticipate potential problems before they arise.
Exactly. They're setting a high bar for ethical and responsible AI development, which is having a ripple effect across the globe. And while some critics argue that the regulations might stifle innovation, others see it as a necessary step to ensure that AI is used for good.
What about the U.S.? Are they taking a similar approach?
The U.S. is taking a slightly different approach.
Okay.
Relying more on existing frameworks and guidelines rather than sweeping new legislation.
Okay.
They're focusing on fostering innovation while encouraging responsible AI practices.
So it's more about guidance and collaboration than strict rules and regulations.
That's the general idea.
Okay.
They're hoping to strike a balance between encouraging the development of AI while also addressing potential risks.
Okay, so we have two very different approaches.
Yeah.
A more proactive regulatory approach in the EU and a more hands-off collaborative approach in the US.
Right.
But are there any common themes emerging in AI regulation, regardless of the specific country or region?
Absolutely. Transparency, fairness, and accountability are recurring themes in AI regulation globally.
Okay.
Regulators want to make sure that AI systems are understandable, that they're making decisions in a fair and unbiased way, and that companies are held responsible for the actions of their AI.
Those seem like pretty reasonable expectations.
They are.
But how do those abstract principles translate into concrete regulations?
Well, when it comes to transparency, for example, many regulations are requiring companies to provide clear explanations of how their AI systems work.
Okay.
Especially if those systems are being used to make decisions that impact individuals.
So no more hiding behind the black box excuse.
Right. If you're denied a loan or a job application because of an AI system, you have the right to understand how that decision was made.
Okay.
And when it comes to fairness, regulators are increasingly focusing on mitigating bias in AI systems. This might involve requiring companies to conduct impact assessments before deploying high-risk AI systems or to use diverse data sets when training their algorithms.
So it's about building fairness into the system from the ground up.
Exactly.
Rather than trying to fix problems after they've already occurred.
Right. And accountability is another crucial element.
Okay.
Regulators are increasingly holding companies responsible for the decisions made by their AI systems. This means that companies need to have clear governance structures in place with designated individuals who are responsible for overseeing AI development and deployment.
So it's not just about the technology itself.
Right.
It's about having the right processes and people in place to manage that technology responsibly.
Exactly.
But with AI evolving so quickly,
Yeah.
can regulation even keep up?
It's a challenge.
It seems like a constant game of catch-up.
You're right. But regulators are learning and adapting just like the technology itself. And we're seeing a growing recognition that AI regulation needs to be flexible and iterative.
So it's not a one-time fix.
Right.
It's an ongoing process of learning, adapting, and refining the rules as the technology evolves.
Exactly. And it's a collaborative effort.
Okay.
Regulators need to work closely with industry experts, researchers, and ethicists to develop effective and responsible AI governance frameworks.
Okay, so we've got a good grasp of the global regulatory landscape.
Yeah.
But let's zoom in on the financial sector specifically.
Okay.
Are there any regulations that are specifically targeted at the use of AI in financial services?
Yes. Many countries are developing sector-specific AI regulations, and finance is definitely a key area of focus. The EU's AI Act, for example, includes provisions that specifically address the use of AI in financial services, such as credit scoring, investment advice, and fraud detection.
Okay, so that covers pretty much everything. What are some of the key concerns for regulators when it comes to AI in finance?
One major concern is the potential for AI to exacerbate existing inequalities. For example, if AI is used to make lending decisions, there's a risk that it could discriminate against borrowers from certain demographics or socioeconomic backgrounds, even if that's not the intention.
So it's back to the issue of bias.
Exactly.
And the need to ensure that AI systems are making fair and equitable decisions.
Right. And another concern is the potential for AI to create systemic risks in the financial system. If AI is being used to manage large portfolios of investments, there's a risk that a flaw in the algorithm could lead to widespread losses, cascading failures, or even a financial crisis.
That's a sobering thought.
It is.
So regulators are walking a tightrope. They want to encourage innovation.
Yeah.
While also protecting the stability of the financial system.
Right. It's about finding the right balance between fostering growth and mitigating risk.
Okay.
And that's where collaboration between regulators, industry experts, and researchers is so crucial.
Okay, so we've talked about the role of regulators,
Right.
but what about the companies themselves?
Yeah.
What role do they play in ensuring that AI is used responsibly in finance?
Companies have a huge responsibility here.
Okay.
They're the ones developing and deploying these AI systems. So it's ultimately up to them to ensure that those systems are designed and used ethically.
Okay.
They need to prioritize fairness, transparency, and accountability,
Right.
not just profits.
But isn't there a risk that companies will prioritize profits over ethics? That they'll cut corners or turn a blind eye to potential problems
Yeah.
if it means making more money?
There's always that risk.
Yeah.
And it's why regulation is so important. But it's also important to remember that companies are increasingly being held accountable by consumers. People are becoming more aware of the potential downsides of AI, and they're demanding that companies be more ethical and transparent in their use of this technology.
So there's a business case for responsible AI as well.
Absolutely. Consumers are voting with their wallets, and companies that are seen as being unethical in their use of AI are likely to face reputational damage and loss of customers.
That makes sense. So it's not just about complying with regulations.
Right.
It's about doing the right thing, both for ethical reasons and for business reasons.
Right. And many companies are realizing that responsible AI is actually good for business.
Okay.
It can lead to better products and services, increased customer trust, and a more sustainable business model.
So it's not a zero-sum game.
Exactly.
Companies can be both profitable and ethical in their use of AI.
Right. And it's not just about following the rules.
Okay.
It's about going above and beyond to ensure that AI is used for good.
Okay, so we've covered the global regulatory landscape, the role of companies, and the importance of ethics. But what about the individual? What can ordinary people do to navigate this brave new world of AI and finance?
Right.
What practical steps can they take to protect themselves and make informed decisions?
That's a great question, and it's one of the most important aspects of this whole conversation. As individuals, we need to be informed and proactive.
Okay.
It starts with awareness.
Right.
We've talked about the potential risks of AI, like bias and lack of transparency.
Yeah.
As consumers, we need to be wary of those risks and make informed decisions about who we trust with our financial data.
So it's about being a savvy consumer.
Exactly.
Doing your research and not just blindly trusting any company that claims to be using AI to improve your financial life.
Exactly. Don't be afraid to ask questions.
Okay.
If a financial institution is using AI to make decisions about your loan application or your investments, ask them how it works. Ask them about their safeguards against bias.
Okay.
Ask them how they're protecting your data.
It's like anything else in life.
Yeah.
Knowledge is power.
Absolutely.
The more we understand about how AI is being used in finance, the better equipped we'll be to protect ourselves and make smart choices.
Exactly. And it's not just about protecting ourselves. It's also about advocating for responsible AI.
Okay.
We can support organizations that are working to promote ethical AI development and use. We can contact our elected officials and let them know that we care about this issue.
So it's about being an informed and engaged citizen in the AI age.
It is.
We can't just sit back and let the technology shape our lives.
Right.
We need to be active participants in shaping the future of AI.
Exactly.
But speaking of the future, let's go back to that big question we posed earlier.
Okay.
Can AI actually create a more equitable and accessible financial system? Is that a realistic possibility, or is it just wishful thinking?
It's definitely a possibility, but it's not a given.
Right.
AI is a tool. And like any tool, it can be used for good or for ill.
Right.
It all depends on how we choose to use it.
So the future of AI in finance is ultimately in our hands.
In a way, yes. The choices we make today as consumers, as citizens, as policymakers, as developers will determine the trajectory of AI. And those choices have the potential to shape not just the financial system, but our entire world.
That's both exciting and a little daunting.
It is.
But it's also empowering.
Yeah.
It means we have a say in how this technology shapes our lives.
Exactly. And that's why it's so important to have these conversations, to explore the potential benefits and risks of AI, and to think critically about the future we want to create.
Well said. This has been an incredible deep dive.
It has.
We've explored the potential for AI to revolutionize finance for better or for worse. And ultimately, it's clear that the future of AI is not predetermined.
Right.
It's up to all of us to shape it.
That's exactly right. The future of AI is a story that's still being written, and the choices we make today will determine how that story unfolds.
So as we wrap up this episode, I want to leave you with a few questions to ponder.
Okay.
What excites you most about the potential of AI in finance? What worries you most?
Right.
And most importantly,
Yeah.
what role do you want to play in shaping this future?
We've only just scratched the surface of what's possible with AI.
Right.
This technology is evolving at an incredible pace.
It is.
And it's essential to stay informed and engaged.
Yeah.
Don't be afraid to ask questions, challenge assumptions, and demand better from the companies and policymakers who are shaping the AI landscape.
We'll be back soon with another deep dive into a different topic.
Okay.
But in the meantime,
Yeah.
keep exploring, keep learning, and keep questioning.
Sounds good.
Because the future of AI is up to all of us.